Welcome to the Unpacked and Empowered Finances podcast. I'm Marianne, your host. This is the place where we break down the complexities of money and personal development into steps you can actually use. In today's episode, I interviewed Jeff Scammell. He is a financial advisor who's been in the business for over 16 years now. He co-owns Wealth Plan Atlantic with my senior advisor, Murray Tucker. And I really like his insights on taxes, on how we can save on taxes, how we can plan for it. And I think that it will be helpful for us newcomers as well. And I think I can definitely resonate to some of the things that he talked about when he said that even people who are born here have certain issues they don't know about the taxes. So we don't have to feel bad if we're just starting over. We don't know a lot about how we can be efficient when it comes to tax payments or maybe just saving in general, because that's where everybody starts from and we can all learn from it. So let's get into the episode. Welcome to the podcast, Jeff.
Thank you
Are
for
you
having me.
excited? Are you ready for this?
Yes, I'm ready. I think I'm
All
more
right.
ready than you. You're all
Yes.
worked up.
So you've been in the industry for over a decade now, and
16 years.
16 years to be exact. That's good. I'm pretty sure a lot of the newcomers, and even just not newcomers, but people starting out here in New Brunswick would want to hear about what a financial advisor have to say about certain stuff. And so we're ready
Sure.
for what you're gonna say.
I'm all set. I'm all set.
Awesome. So what's the most common mistake that you see people make once who are in their maybe 30s to 40s when it comes to finances?
I probably the first one is just listening to people around them about money.
Mhm.
So there's a saying that I don't know who said it first, but basically if don't listen to broke people, or you get broke results kind of thing. So if everybody is in the same exact situation, they're
Mhm.
probably going to end up giving you advice that would keep you in that same exact situation. So it would be best if you were to seek out professional advice on your finances, growing investments, saving, insurance, and of course, the biggest one is most people, not just newcomers, do not understand the progressive tax system that's here in Canada.
Yeah.
So if I could say anything, try not to just listen to people at the lunchroom table about all the finance stuff. That doesn't mean that they're not correct once in a while, but
Mhm.
probably seek out advice and get a kind of unbiased opinion, right?
Yeah, absolutely. I think it's really good if you also filter what you hear, because even the books that are written by great authors in finance, some of them doesn't have to necessarily apply to you. So yeah, I think that's a really good advice there.
And there's a lot of great books that are bestsellers that have contradicting opinions. So at the end of the day, everything really needs to be customized to the client, to the individual, right? My financial plan is going to look different than yours. Yours is going to look different than somebody else, right? The biggest thing is you're going to want to really unpack what you want to accomplish, your goals, your aspirations. And also, everybody has different abilities to be able to implement a financial plan. Somebody making $100,000 a year is going to have a different ability than somebody making 30. So
Mhm.
somebody with 4 kids is going to have a different ability than somebody with no kids, right? So everybody's a little bit different. So I'd say, like, what was the question originally? Like, what was the mistake, or you wish people would know, is basically, seek out some advice,
Mhm.
but not necessarily from, the person across the lunchroom table. They
Mhm.
may not know much more than you, but you're going to put a lot of faith in them. I would rather put more faith in an advisor, an accountant, a tax specialist or something.
That. What do you think about newcomers when they first get settled here? Usually we would just go to the big banks.
Mhm.
Should we open our TFSAs and RSPs right away? Is there anything that you can probably see that we could be making a mistake?
Yeah, and I think going to the bank, at
Mhm.
least you are seeking out some kind of advice, like I said, instead of across from the lunchroom table. But there's a couple issues first. So one is, you need to make sure that you have everything that you need to be able to open those accounts, right? Mostly it's a social insurance number. But then you got to figure out which one makes the most sense for you. If you're just getting started, basically everybody still pushes RSPs. I think RSPs are overrated or they're oversold anyway. I don't think if you just get started and your income is relatively low, or maybe you're only there for half the year, so of course your annual income is low, it may not make sense to just plunk things into RSPs. It limits what you can do with it down the road. Likely you're going to want to maximize things like tax-free savings accounts if they're available to you. You're going to want to maximize first-time home buyers plans, again, if it's available to you. Not everybody, it doesn't, there's certain reasons why you may qualify or not, but those are probably better places for money than RSPs to start. And if you're working at an employer that's giving you RSPs, I would say match it. Don't give up the free money, right? If they're going to match 4%, 3%, 5%, whatever, I would definitely do that.
Yeah.
Don't think about it too much. Yeah.
Yeah. When I got started with my previous job, I just took the RSP because I know that it's going to double my money.
Yeah.
At least that's what I was told.
It's 100%
then.
return.
Yes. So I was like, sure, if you're going to give me money, then give me it and I'll sign up for it. Even though at the time I didn't understand what that was about.
No, most people don't, but I would say you should definitely take the.
Yeah. Now, so what I find is it's common for us, we don't really think about retirement right away. And then when we actually decide to, we have to think about our own retirement so that we break the cycle, we also have other priorities.
Yeah. You've got aging parents, you've got, siblings maybe in need, other extended family, you've got your own kids. It's not pulling on you, right?
What do you think is a good balance so that you can kind of like early on set aside something, but still be able to meet your responsibilities or things that you want to do for your family?
I think, like you said, the cycle. So I think starting as early as possible, putting something away. It doesn't have to be huge because, you've got lots of obligations, but you need to put something away and have it invested, not just in the high interest savings account. It should be invested in growing, outpacing inflation, because it is so hard to catch up, right? And at some point you're going to have those, there's always going to be needs, something pulling on your financial situation. I would just think you need to make sure that you kind of pay yourself first, and then you can be more generous with what's left over. Because there's going to be a point where not only do you have no savings, maybe your income slows down, you can't afford to send any money back, and you don't have anything to live on either. So, it's just kind of, it makes sense to just tuck some away for yourself and invest it.
So you co-own Wealth Plan Atlantic.
Yes.
And you've been in the business for 16 years now.
Yeah.
What made you decide to be in this industry?
This isn't going to be a great answer. So I graduated from university late 2009, and where I was doing my co-ops, not hiring because we were in a recession. So lumber company that sells to the United States, so that I was working at originally, and they, there's no housing starts during that period. There was a housing crisis. I just went to the place that hired me. And that was Freedom 55, which doesn't even exist anymore, but it's the selling arm of London Life, Canada Life. And they would train new advisors. And when I started in the industry, I didn't even know really what it was. And from there, I learned that a big chunk of it, at least at the start, is a sales job. So that was a bit of a shock, but started to learn that and built up clientele from there.
What made you stay though? Because I know it's a tough industry.
I didn't. I actually took a job, like a salary position, for a few years after about a year of being in the business on my own, where I learned a lot, kind of, we call it like baptism by fire, to learn a lot about pensions, a lot about group benefits, and build out their financial planning division of their company. So it was kind of a lot for somebody young, but the best way to learn is to stick your finger in the socket. That's how I learned, is by getting out there and making mistakes and working hard. So in 2014, I left that company and started my own.
Okay. What do you think about life insurance?
I love life insurance. I've got a ton of it. It's a very interesting tool. It's a very misunderstood tool. It is a financial instrument. It's not just a insurance policy. It can be used in many different ways. And at the end of the day, it's mostly about, for me, it's about protecting families, protecting assets, and minimizing tax. Talk a lot about tax in my life. So that's one of the things I love about life insurance. One other thing about life insurance is that among the life insurance suite of products are some very important, we call them in the industry, living benefits. So your disability insurance and critical illness insurance, both very important because it helps protect you and your family while you're still alive of anything that may happen, right? Illnesses or not being able to go generate that income, right? Your biggest tool for building wealth is going to be your income.
Yeah.
And if that gets squashed, you better hope there's some insurance, right?
Yeah, absolutely. And a lot of what's common as well is, so for example, when we got started here, we wanted to save as much money as we can to buy our first home because that's like the dream. We have a
Yes,
house in
of course.
Canada.
Yeah,
So I had two full-time jobs,
yeah,
and my husband had I think, three jobs, like one full-time job and two part-time jobs delivering.
yeah,
But also, as much as we all want to work two jobs, three jobs, the tax bill hits you.
yes,
So
absolutely.
all of that money gets lost anyway. What's a good balance, I guess? What's your advice around that?
Well, that goes back to my first thing that I kind of mentioned about the like learning that graduated tax system. So it's not, even though you go into a new tax bracket, for example, does not mean that all your previous earnings are being taxed,
Yes.
which is a bit of a misunderstanding. The next dollar is taxed higher. Where people run into the issue is having two or three jobs. The payroll of those companies does not know that you have other
Yeah.
income already using up those lower tax brackets and those credits, right? So, for example, your first is about 15,000. I always say because it varies every year, but it's about your first $15,000 isn't even taxed. That's a personal exemption. So, if each employer is assuming your first 15 is not taxed,
That makes
that's
sense.
not the case, right? Because only one of them gets to use that, right? When you put your taxes together, it's really just looking at your total. And
That's
that
true.
puts you in. So basically what's happening is you're not getting enough withholding tax taken out of those paychecks. And then in the event of like delivery and Uber drivers or whatever, I don't even know if there is withholding tax. I think it's more like of small businesses that you're running.
Yeah, my husband used to do the Amazon delivery and he didn't get taxed at all.
Yeah.
But so he was the one paying it for it on the return.
So that's again back to this kind of full circle in what we've talked about already is understand that tax system. By the way, most Canadians don't that have lived here their whole life. I've got retirees that still don't quite know how the system works. Right? So that again, a lot of that is because they just learn it from the kitchen table, right? Or from the lunchroom table. So in that situation, it does still make sense. Like you still are going to net out more, but your like what you have for your time may be a bit less than you originally thought. If you're gonna put in 80 hours a week, that seems like a lot of time. You just try to do that calculation and get the right taxes taken out so that you don't have a big bill at the end of the year.
So yeah, just so the main practical thing is to make sure that all your employers know that you do have these other jobs so that they take the right amount of withholding tax.
And they may still not do it properly. You may want to do it yourself and
Just
figure
save it.
out, okay, or even get them to withhold it if you want, but you should know, okay, if I'm going to make 40,000 here and 40,000 there, that you're actually making 80 when it comes to your total income tax. And only the 15,000 is that personal exemption. So you're getting taxed on 60, 65,000, not taxed on, 25,000, 25,000, like if you were just making 40, right?
Yeah.
So it does seem like it jumps a lot, and it's just because there's a lot less credits.
Some people would have it like take an extra taxes. What do you think about it? Because I think I heard a podcast that said what you're essentially doing is just giving money to the government and they're the ones earning interest instead of you actually saving the money. And if there's extra or if you actually owe money, you pay out of that savings.
Yeah, it's just prepaying is all that withholding tax is. So I like it as a budgeting tool because you don't have to worry about where it is and you can't spend it. Like once it's gone to them, you won't get it back until tax time.
Because I think it's also a good discipline because if it's already in your hands,
You might
you
use it.
might use it. You may
Yeah.
decide to do whatever, but
I will say that because people don't have to save it and then go pay it, they don't appreciate how much taxes they pay. Because we pay a ridiculous amount of tax. And I think that if there was not, this is more of a general thing. I think that if everybody really saw how much tax they paid, that there would be a bit more of a revolt when we see the waste of government spending. A little more political here. But really though, like if you think about making $80,000 and then having to put cash in a suitcase and go take it to the CRA of $25,000, you'd be questioning what the hell they're doing a little bit more. But it is difficult for people to sit on cash for a full year and then pay the government. It typically will get used.
It hurts you so much you'd hate the government. But to be fair, because from where I'm from, there's so much corruption too.
Yeah.
I actually appreciate that I do get some of the taxes that I'm paying for based on healthcare or childcare benefit. We don't even have that.
When was the last time you were at the hospital? Not much for healthcare going on.
Yeah. Yeah, right. When I gave birth to my youngest.
Yes, that is good for sure. But you're not doing that every year. So
yes. Okay. That makes sense.
Yeah, but no, it is, you're right. Like every government has corruption, right? But we just need to make sure that we're not giving them any more than they need. At least within the current laws, right?
Yeah. And it's being used well. Okay. Well, what's the one thing you wish every Canadian household would know before they turn 40 about taxes?
I wish they knew how much taxes they pay and going to pay over their lifetime. Like it is unbelievable, really, when you think about it. People who are in the top earning are paying over half of their earnings, working till June for free. Typically, people start in their 40s, go into higher tax brackets because they're moving up the ladder and earning more and more and more. And every year, like you kind of said, like, oh, there's more money going to the government, more taxes. So I just think that people need to understand taxes more because it's going to be a big expense. It's the biggest expense that they'll have in an annual life. Like the biggest one expense, I should say.
Okay. And if someone listening today has never sat down with a financial advisor and is honestly a little scared to start, what is one simple first step you would tell them to take?
I guess a good financial advisor is going to try to identify your goals. So first step, maybe before going, is figure out what you really want to have happen financially, right? Like maybe you just need a little advice on what to do with some extra savings. Maybe you've got some debt that you're uncomfortable with. Maybe you just got a new job and you want to do the smart things with the first paycheck kind of thing, like start those good habits. So just figure out what your goals are first. And a good advisor should be able to coach you through some of that. But if you have at least an idea, it might be less intimidating to go to an advisor because we're going to find out what your goals are. Like what can we advise on if we don't know what you want? So that's something that you could do right away. Just start to figure out what are your goals, and then you come into an advisor and they can help kind of fill in those gaps. And hopefully it's a good person that can ask some really good questions and drive out kind of what your actual goals are, plans, and then create those plans working backwards, right? So if you want to buy a house in 3 years and you need this much money, how can we get you there, right? Some of it's just math, right? Some of it is, where do we put the money, right? We put it into a tax-free. Do we put it into a first-time home buyer? Should I use my RSPs? Because you can use your RSPs to buy a house too. But does that make the most sense? So that's where the advisor comes in, is figuring out the plan. The goal needs to kind of come from you. You being the client, right? Or the initial person who's never seen a advisor before.
And is there anything else that we haven't discussed that you want to share that would be helpful about finances?
Yeah, sure. So I think automating is probably the easiest way. We just talked about automating the payroll taxes come
Yes.
out, right? And you don't really have a choice on most of it, but regular savings. So if you're gonna put away $100 a paycheck or whatever, you should probably have those automatic withdrawals happening the day you get paid. It's a lot easier to take from the top of the barrel than the bottom. So automating, and there's a couple of reasons for that. One is it's habit. That way, if you never know how much your actual net paycheck is, because it's always being used, you've got every dollar kind of working for you, then you don't get into those bad habits, right? Sometimes the worst thing is if somebody's earning a good income and then we try to do savings, they're like, well, I already got my new car payment, going on vacation, my credit card bill's already started, that kind of thing. So it's always easier to take from the top. So build those habits early. And then the other reason why you would do it automated, and try to do it as often as possible. So if you get paid every 2 weeks, I would definitely do it every 2 weeks. Don't do monthly. The reason being is if you're moving that money into an investment and it's buying into an investment, whether it's just the market in general or you've got your own risk profile, it's called dollar cost averaging. You're going to take advantage of the fact that the market is volatile. It's moving up and down every day. And when you buy in on a regular basis, you don't have to think about timing the market. You're just buying it at whatever the rate is that day, or the price is that day. If the market's down today, great, you're buying it at a low. If it's higher, great, you bought in. Lower again the next week, doesn't matter. You're just automating it. And over time, it does end up compounding a little bit better in theory. In past practice, it has. We don't know what the future ever holds, but it's always come out a little bit better if you do regular savings.
Thank you so much for your insights.
Great. Thanks for having me.